Hi everyone, I am Yash Sangvi, CA AIR 25 and a finance professional. And in this video, we are going to talk about yet another career in finance, which is equity research. We'll follow the exact same format, but I first give you a brief overview and understanding of what exactly an equity research firm do and what would your day look like working as an analyst in an equity research firm. Then we would evaluate this career in equity research on the basis of the following 5 parameters. Number 1 is the ease and route of entry. Second is the pay. Third is the work-life balance. Fourth would be your peer group. And fifth would be the exit options. So let's get started. First, let us understand what exactly an equity research firm does. So think of it this way. We know that there are a lot of companies in India and abroad who have their shares listed either on the Stock Exchange of India or anywhere else globally. When a company has its shares listed on any stock exchange, there is a price associated with the share of that company. It is at this price that you can decide to either buy the shares of that particular company or sell the shares of that particular company. You decide to buy the shares of that particular company when you believe that the current price of that share is lower and the price is likely to rise in the future. But you would decide to sell the shares of that particular company when you believe that the current share price is higher and is likely to fall in the future. Your prediction about whether the prices would rise or fall in the future would depend and would be decided based on the information that is publicly available, the annual reports of the company, their earnings call, your understanding of that particular sector or segment in which the company operates, and the generally available market research reports. Now, when this exact same activity of predicting the prices of the shares of any particular company in the future is done at an institutional level with a lot more data than is publicly available, with insights from people like the promoters of the company, strategic investors in the company, and even from external stakeholders such as dealers, distributors, and channel partners of the company, and with a lot more diligence and precision than an individual like you or me would do, that is known as equity research. And that is what exactly an equity research firm does. So now that we have an understanding of what exactly an equity research firm does, let us look at who would be the likely buyers or likely requirers of this value proposition that the equity research firm brings to the table. Ideally, there could only be two types of people who would require the research reports of the equity research firm. So think of it this way. The research reports that are published by the equity research firms could either be used by their external clients or customers, which could be institutional investors and investment banks, etc., who would make their investment decision basis the equity research report published by the equity research firms. This is generally known as a sell-side equity research report and a sell-side equity research role. On the other hand, if that equity research report published by the equity research desk is used by the firm's own mutual fund house or the firm's own hedge fund arm, then that becomes a buy-side equity research report, and that research report is used by the mutual fund house or the hedge fund arm of that same firm to make their own investment decision. Since here the end users of the equity research reports are very different, there lies a specific nuance in what exactly a sell-side equity research firm or an equity research role would involve and what a buy-side equity research role would involve. In a sell-side equity research role, generally the coverage is more about the breadth and not as much about the depth. As an analyst, you could be covering multiple companies, and in smaller firms, you could in fact be covering multiple sectors. But in a buy-side equity research role, it is a lot more about depth than the breadth. They cover only very specific sectors and very specific companies. They also focus on knowing the very details of any company than just knowing the overall financials or overall sector. In a buy-side equity research role, the horizon is a lot longer than in a sell-side equity research role, where the research reports get updated frequently basis the earnings and the financials that the company publishes from time to time. And hence, The level of diligence, detail, and depth in a buy-side research role is a lot more than in a sell-side research role. Now that you have an understanding of what an equity research firm does and who could be the potential buyers of the value proposition that the equity research firm brings on the table, let us understand what would your role be as an analyst in an equity research firm on a day-to-day basis. See, because your fundamental duty as an equity research analyst is to arrive at a future price of a particular share, your activities or your day-to-day job role would definitely be centered around the same. You ideally perform three tasks. One is historic, one is futuristic, and the third is a lot more people oriented and talking to a lot more stakeholders. Those are your three tasks. When it comes to historic, what you would exactly do is analyze the earnings and price trends of the company's share. You would understand whether, and if so, to what extent is there a correlation between the earnings and prices of the company. You would look at the past and see how certain macro and micro events have affected the prices of the share of that particular company. That would be one part of your job. The second would involve, as I said, talking to a lot more people and understanding the company. So in this part of your work, you speak to the promoters of the company, you speak to the strategic investors in the company, you talk to the dealers, distributors in the company to understand whether exactly there is any demand for the product that the company is selling, or is it just push sales through which the company is able to achieve the growth that it is projecting. You speak to the promoters and strategic investors to understand what plans do they have for the future, what is their goal of achieving a certain revenue number, a certain earnings number, etc., and by what year do they want to achieve that target. That helps you in refining your own assumptions about that particular company's earnings growth, that particular company's revenue growth, their debt equity ratios, etc. That is the second part of your job. And the third part of your job is, of course, a lot to do with financial modeling, with valuations, with understanding the current earnings of the company, summarizing the earnings call, evaluating their annual reports, looking through the numbers and giving specific insight on what is currently happening in the company. As I said, because your final output is a share price that you will quote on the basis of which people will take their buy or sell decisions, the third part becomes a very important part, because it is basis the financial modeling that you will do which will enable you to arrive at the share price. You could be using multiple techniques such as discounted cash flows, comparable company analysis, valuing the companies on the basis of the PE ratios, etc., which is why the third part is the most predominant aspect of your work. Now that you have an understanding of what exactly you will be doing on a day-to-day basis in an equity research firm, let us evaluate this career in equity research on the basis of the 5 parameters that we had decided. First is the ease and route of entry. Equity research as a profession in India is not very old, and hence it is not very large either. There are certain very large reputed firms whose equity research reports carry a lot of value, credibility, and reputation. But apart from that, there is a very long tail of small firms who also publish their own equity research reports, but those equity research reports do not really carry as much value or do not have as much reputation as the reports published by these large firms. In order to enter some of these large equity research firms, which could include firms like CLSA, Motilal Oswal, JP Morgan, Morgan Stanley, etc., academic excellence is almost a prerequisite. You could be a graduate from a top tier MBA college. That could be one route of entry into these large equity research firms, or you could be a chartered accountant who has a rank in the CA final or inter, or has at least cleared their CA exams in the first attempt. If you are someone who is deeply passionate about public markets but has not been able to grab such high academic qualifications, then your route to making an entry into these large equity research firms could be a little longer. You need to start at smaller niche but good firms. You need to develop an expertise in one particular sector and have a hypothesis about at least a couple of companies. You need to prove to the interviewers in these large equity research firms that your lack of educational or academic excellence has not in any way hampered or hindered your body of work. You need to prove to them that time to time the research and the numbers that you had published, they had turned out to be true. Only then will you have a shot at any of these large equity research firms. If we look at the pay in equity research, it could vary anywhere between 10 to 15 lakhs per annum fixed, plus minus 2-3 lakhs on each side, and the variable component in each of them could be anywhere between 15 to 20% of the fixed component at an initial level. As you move further, your variable component in equity research increases steeply. Of course, your fixed component also increases. Your variable component in equity research also, by the way, depends on whether you are working on the sell side or on the buy side. Because in the buy side, the variable component could be very high and could also increase a lot more faster than on the sell side. If I talk about the work-life balance in equity research, it is one of the very few careers in finance that has a very good work-life balance while offering you a core finance profession. You would be in the thick of things. You would be, analyzing models, making models, at the same time having a decent work-life balance. This is something which is a rarity. Your work week in an equity research job could be anywhere between 50 to 70 hours, and it is very rare that you would be working on the weekends. Only in certain cases, and that too at times in sell side, it is required for you to work on the weekends. This could be the times when the earnings reports, etc., are published by the companies, which is after every quarter end, etc., and that would be the only time where you would be required to stretch as such. And hence, this makes the career in equity research a lot more, likable and a lot more sought after. If we talk about the peer group in equity research, they are likely to be some of the smartest people who have an affinity for public markets and who also like numbers and financial models like nobody else. They are people who want to be judged after every point in time and want to be gauged whether their numbers have proved to be correct or not time to time. These people are extremely smart, academically qualified, and hence would be of help to you whenever you decide to do anything in life, whether to move up within the same ladder in equity research in a different firm, or even if you decide to take any other alternate career or your own journey of entrepreneurship. And hence, this network is something which is extremely valuable. And last, when we look at the exit options in equity research, there could be two kinds of exit options. First, if you are on the sell side of equity research, your preferred exit option would be to switch to the buy side in equity research. Because a buy side role in equity research is a lot more, pays a lot more than a sell side equity research role, and B, it has your skin involved in the game, because own money of the firm is being invested, and hence a lot more responsibility is involved, and everyone wants to make a switch from sell side to a buy side. But on the other hand, if you are already working in a buy side equity research role, your exit would definitely include things like a wealth manager. You would want to become fund manager in some of the largest mutual funds in the country. Anywhere where investment decisions are being taken, where a question of whether an amount should be invested in a particular share, security, commodity is being taken, you would be the preferred candidate. You would be someone whom people would want to look at and want to hire. That would be your exit option when you are in an equity research career. So, if you are someone who wants to be in core finance but wants a decent work-life balance, you are someone who has high affinity for public markets and from time to time wants to gauge and evaluate whether the work that you had put in, whether the number that you had finally published, the share price, has turned out to be true or not, then equity research is the absolute right career for you. But if you think that all of this as a package does not excite you a lot, you want to be more in live deal scenarios, or you want to be on the decision making part of things and not just the advisory part of things, then probably you can look at some other career in finance, some of which I have already talked about in my earlier videos and some which I'll talk about in my future videos. Hope you like this one and wait for the next one. Thank you.